One of the biggest money wasters out there is paying interest. Whether you're buying a house, buying a car, paying off credit cards, payday loans, whatever loans you have, the only benefit you get from paying these loans is that you're going to build your credit, you're going to get the item that you purchased, but that interest you're paying out is not going to benefit you. That's money going to the big corporations, these credit unions, these banks, the people that own your loan. Now, young adults have to be especially careful for this because typically young adults don't read the fine print. On top of that, young adults don't have a strong credit history, and it's not because they have bad things on it. They just have a lack of history. But that's the easy way to fix it. By using a credit card, using something on your history, that's going to grow your credit score. For example, if you go to a dealership right now and buy a vehicle, and I want you to timestamp this down below, any dealership you go to, they're going to give you the car. Bad credit, no money down, no matter whatever the case may be, they're going to give you the vehicle. That's their job. Their job is to sell cars, make quotas. What's going to happen is whatever bank that buys your loan, you're going to pay back what the vehicle is on top of the interest that they give you. So for example, say if you bought a vehicle that's $21,000, that bank is going to give you the money to pay for the vehicle, no problem. Now you got to pay them back on top of the cost of doing business, which is that interest rate. Say if you have bad credit and they give you 18%, to do business on a $21,000 vehicle for 6 years, that's an extra $13,000 you have to pay to the bank that don't benefit you in no way. Now, say if you had the same setup, so say if you had a vehicle that's $21,000, 6-year loan, 7% interest, you're only going to pay an additional $4,700. That's almost $8,000 when you talk about the difference between the two. That's a big difference. That's money that you can use for anything else. Credit cards can have an even higher interest. I've seen credit cards with 20%, 25%, 30% when it comes to the interest. And the reason why is because this is contingent on your credit score. I've seen people fall victim to revolving debt where they pay their minimum payments every month and their balance don't change. And the reason why is because you have to pay more than what your minimum is. When you pay your minimum payment, that majority of that is going towards your interest. A small portion that's going towards your principal. And if you do that consistently, you won't see any change. So this is why you see a person that make a minimum payment and then they'll write a check to make sure that they pay their principal payment as well. Because as your principal fall, your interest falls also. And even when I bought my house, here, the overall payment was $150,000, give or take. For the first 11 years, and it's so funny, when the first 11 years of me paying my note on time, I'm only going to pay $11,000 towards my principal. All of the rest of that is going towards interest. If I follow that through for the rest of the 30-year loan, I'm going to pay an additional $150,000 on top of the $150,000 that I used to purchase the house. So this is why you see people, like I said, you make that principal payment and you make your month-to-month note. Principal payment, month-to-month note. And you may be thinking to yourself right now, I don't have money to pay off all my loans in one swoop. Most people don't. That's why we take out loans. But what you can do is you can look into doing refinancing. Refinancing is simply just restructuring your loan, whether you want to change a term or you want to change your interest rate. If you've been paying a bill over time, you've built your credit up, now's the time to refinance. Now's the time to lower your rate without touching your term. So the remaining of your loan, you're going to save the rest in interest. That's money back in your pocket. That's how you save money from this. Hey everybody, thanks for watching the video. I want you to leave a comment down below from what you learned from the video today. And if you're new here, I want you to leave a like and subscribe to the channel for future content.